the link right here in the chat. And let me know if you guys cannot get to the live without it. I mean, with that link. Let me know if you can't get to the live with that link. Let me see if I... Oh, wait. Let me try this link. Hold on. Delete that. And I'm going to try this one. I think that's better. Where'd my thing go? Oh, there we go. Okay. So let me know if you cannot get into the live. That is the link. So everybody should be able to get in the live. Hey, Charles. So if you guys can just go switch over to the YouTube one. I'm going to shut this Facebook one down. And I will see you guys soon. Hi, Yvette. Awesome. You made it over. Hi, Miss Clark. Okay, let's see here. Okay, let me go post this in the groups and then we'll just wait a few minutes. Hi, Rita. Hi, Ashley. Hey, guys. Are you guys excited for tax season? All right, I'm going to just post this in a few more places, and then hopefully we should have a bunch of people by then. It's crazy. You can always tell when it's like really coming up to tax season or it's tax season because, you know, like usually my videos have like quite a couple hundred people in it. So I think we're just going to wait a few minutes. Oh, you know what? I forgot for my clients, I can post in our little chat. Forgot about that. And if you are my client for that chat, just so you know, you can always make sure that it's muted. Just mute it. Let's see. BEM. Where is it? Oh, communities. Okay, perfect. No, that's not it. Oh, okay, here we go. Perfect. Okay. Awesome. All right, guys. So let's just wait a few minutes. I want to see, is there a way that I can share my screen with this live? I don't know. Probably not. Hi, Miss Bernice. Do you know how you compare H&R Block refunds? I was considered. Ashley, so refunds should all be 100% the same. Nobody should have a different refund, whether you go to H&R Block or Jackson Hewitt. The only way you would have a different refund is if you're dealing with a tax professional that really doesn't know what they're doing. Oh, I lost you guys. Hold on. Hold on. I lost my camera. I was trying to move it over so I can actually look at the camera. Let's see. Perfect. Okay. So again, no, don't worry about deleting it. That's fine. So there is no difference unless you're dealing with a tax professional that just doesn't know how to get you all of the deductions and credits and everything like that you are eligible for. That would be the only reason that you would have a different refund. Now, to mention TurboTax, I'm glad you mentioned that, because with TurboTax, see, everybody thinks they're doing their own taxes on TurboTax, and in reality, you're really not. You're just answering questions, and TurboTax is doing your taxes for you. So what happens is, if you don't know the right question, if you don't know the right deduction, if you don't know the right credit that you're eligible for, TurboTax is not going to give it to you. They're going to give you the bare minimum. And so that's why there could be a pretty big difference between TurboTax and a tax professional like H&R Block and me and stuff like that. Otherwise, the difference between me and H&R Block, one, at least when you sit down with me, you know that I have years of experience. I've been doing taxes for over 15 years now. And I update myself. I'm literally outside of tax season. All I'm doing is taking classes so I can stay updated, learn more and more, because the tax code is so extravagant that there's nobody that literally knows how to do everything. But what makes a really good tax professional is someone that knows how to look up the information and knows where to find the information, because you're always going to get something new and something that you don't know, which I love. I love getting a client that has something new for me. Bernice had something new last year. I was so excited. She was a new experiment, so I got to learn stuff. So I will never tell people that I know everything, because I absolutely do not know everything. But I definitely know where to look up the information and where to find the information. So I would say that's the difference between us. And also, I would say I'm cheaper than them. I think H&R Block, Jackson Hewitt, all the other big names, I think some of their prices are out of this world. I think they're way just too extreme. So my prices are definitely not as high as them. But I also offer the same exact thing they do. So I offer advances. I actually offer advances before they do. They don't offer advances until IRS actually opens, and I offer advances as soon as the new year starts. And that's pretty much it. Oh, there is one thing that H&R Block and Jackson Hewitt does do. They do offer what's called a holiday loan. So there is a difference between a holiday loan and a tax advance. A holiday loan usually comes out November, December, sometime around there, and it's only a couple $100 to maybe up to $1,000. And it's an actual loan, so it does go off your credit and everything like that. They will tell you, oh, if you come back and file with us, you'll get this amount for your advance. Not true. Does not mean you'll automatically get that amount. That's what you could get up to. But if you get the holiday loan from Jackson Hewitt or H&R Block, or both of them, because you can get it from both of them, you do not have to file with them. You can still come and file with me and get the advance once January starts. An advance is money based off of your actual tax return. So you actually are filing your official tax return, and you're getting advance off of that money. Um, so that is the difference between them. Please tell me if you're going. Yes, I will definitely let you know, Bernice. Absolutely. I'll be posting it like closer to next month sometime because it'll be for December. They'll start in December. Yeah, no, I totally get it, Ashley. A lot of people don't even know, one thing with H&R Block and Jackson Hewitt and the big guys, even though they're big corporations, the scariest thing is you don't know who you're sitting down with. So the person that you're sitting down with, they could have started like 3 weeks ago and you just never know. So I'm not knocking those guys. They have some amazing workers there. Some of them I've been trying to say, get away from there, go on your own. I've been trying to recruit them, but no. You definitely have to know who you're filing with. I had someone tell me they can claim their baby due 2023 January on. No, Latoya, that is absolutely not true. So unless they give birth December 31st or before that, they cannot claim that baby this upcoming tax season. Absolutely not. Yeah, Bernice, we can definitely fix your W-4. After the live, I'll message you about it. Um, I really wish that this did like a screen share or something. Okay. So speaking of that, yeah, I know about the overpayments with the advanced CTC, Ashley. What about them? That was for this year's taxes. Um, so speaking of the W-4s, so I just want to advise people because starting in September, I ask my personal clients to send me their last pay stubs so I can check and see where they're at. Um, and I can let them know if they're on the right path, if they need to update their W-4, and stuff like that. Because especially with these new W-4s, it's really tricky, and a lot of people don't understand what's going on. Especially when you see see your pay stub, and you're not getting any federal taxes withheld, and you're like, "What is going on? I'm gonna da da da." So I think, yeah, Latoya, honestly, if you like, I'm sorry to this is why I usually wait till the end because my ADHD will have me all over the place. Um, let's see. Ashley, I would have to see your tax return, but what do you mean you got overpaid? You overpaid the CTC? I'm not understanding. Um So the biggest problem is if you're okay. Yeah, you would not get that when you filed in this year. You wouldn't get the remainder of that. So if they deducted it from your refund, that is correct. So with the advance, pretty much the advance is just it was giving you an estimated amount on what you would file the next year. And before I go on, I'm so sorry for your loss. My heart is truly with you as a parent. Um so the advance was pretty much um it was just an estimate of what you were going to file for this year. So if they gave you enough, if they gave you child tax credit for 3 kids, um because that's what you filed in 2020. So they assumed in 2021 you would file 3 kids. Then that's what you got for the advance. But then when you filed in 2021, if you only filed 2 children, that technically means you got the full amount for one of those children and you were only due another half amount. So it's not like they deducted it, they just gave you what you were owed. So technically, what you got for the baby that passed, you weren't supposed to get. It was an advance from this year, not from 2020, if that makes sense. If that doesn't make sense, I can try to explain it a different way for you. Latoya, here's a link to the IRS website. That literally there proves your point, just so you know, just in case, because me, I like having receipts when I'm talking to people. So there's your receipt. Oh, really, Lucy? Yes, please share, Lucy. Yeah, absolutely, Ashley. After the live, when we hang up, when we stop, you can just message me. Now, okay, so back to the federal withheld. So they changed the W-4 a couple of years ago with the new tax laws. Uh and the reason being is they wanted you to have a bigger paycheck so you can live, and a smaller refund, because at the end of the day, tax refunds were never supposed to be huge. They were never supposed to be something that everybody relies on every year. They never were supposed to be that. Technically, tax season is just, honestly, that you don't owe taxes. Like, you don't owe any more taxes. That's what it's supposed to be. If you get a huge refund, if you get a refund, that's great. But a lot of people, what were happening was, a lot of people was, that's your money in your tax refund, um, plus whatever credits you're eligible for. But a lot of people had money in their tax that they were giving, so the federal taxes that were being withheld, that they didn't need to get withheld. So they were having smaller paychecks and this big refund. So what happens when you have a smaller paycheck? You're struggling check to check to check. So getting a couple, 50, 20, $100 extra in your paycheck instead of having a big refund at the end of the year, that's what they were trying to do with this whole new W-4. Now, a lot of people still don't like that. They're like, no, you know what? If it's not in my paycheck, I don't care. Out of sight, out of mind. I'd rather it be in my at the end of the year so I can get this huge tax return, because, I always do this with my refund, or I always take my kids on vacation, or I always do blah, blah, blah. So they want to not have it. They want to have more money taken out of their thing. So the first thing I will tell you, and now it is the end of the tax season, the end of the year. So it's going to be, it really kind of makes no sense for you to do this right now. But you can always start it now. It doesn't matter. It always help your refund this year for next year, but it won't drastically change it. And then that way you won't forget for next year. But what you can do is, on your W-4, let me see, I believe it is line 3C or something. Let me double check. I don't know everything offhand. It is, yeah, so step 4, C. So it's 4C. And what you would basically do is, you would put extra withholding in there. $25, $50. What you would want to do is pretty much calculate it. So $50, is an extra $2,600. So my honest advice is to speak to your tax professional, because we can tell you, especially if you're going to have the same job around the same amount, we can let you know what your tax liability was last year and what'll be good for you. So always, you can always speak to your tax professional about that. And Ashley, I would say that's just another benefit of having a great tax professional instead of TurboTax, because TurboTax don't tell you nothing, they don't teach you nothing. I honestly like to educate my clients. This is actually one of the reasons I'm doing this live, because recently they when, like I said, when I started, I around September, I start asking my clients to send me an updated pay stub, and then I find out where they're at to make sure that they will not owe for next tax season. And a lot of clients just didn't understand. They didn't understand why taxes weren't being taken out, why taxes were being taken out too much, why their refund was only going to be a certain amount. I think the last couple of years of tax season kind of spoiled us, and people really, really had these huge refunds, and they're not realizing that we are totally back to normal this year, guys. So your refunds will be normal. Like, they're not going to be outrageous. And they go back to depending on your income. If your income is not that high, your refund is not going to be that high. And that is one of the major reasons why I can't stand those tax offices that have those big flyers that say, one kid, you get 52,500. Two kids, you get $6,800. Three kids, you get $9,999. Obviously, they all have like little fine print that nobody reads, and pretty much it's up to, like, you can get up to that for each child. You have to make a certain amount of money, like it's between this amount and this amount, you get the maximum credits. But not everybody makes that amount, and the lower your income and the higher your income from those amounts, the lower your tax credits are. Bell, so you changed your W-4 and they still aren't taking federal out. You might not be eligible, not eligible, but you might not need to get federal taken out. So this is the thing with the new W-4. Again, if you look at it this way, so there's a standard deduction. It's called a standard deduction. And depending on, right now, I'm not going to confuse anybody. So right now, it depends on your filing status. That's your standard deduction. So the standard deduction, pretty much what it does is, for your tax bracket and your tax liability, um it lowers it so you won't have a big tax liability. So what happens is, let me see. I'm going to, all right. And again, like I said earlier, the whole point of tax season is not to have a tax liability. And if you have a tax liability, to make sure that you are getting enough taxes withheld throughout the year so you won't owe, or they won't take out of your return. So this is the reason why I wanted to do this, because a lot of people, I'm starting to see that a lot of people do not understand exactly what a tax return is. Like, I don't think they understand what it is. They just think it's their money or free money, or because they have kids they get money. I really don't know. I'm actually going to ask you guys why I put this in the comments. What do you think a tax return is made up of? Can you guys let me know? Can a few people let me know so we can talk about it? just comment in the chat. What do you think like your tax refund is made up of? Mm, mm, mm. Do, do, do. I'm trying to, I should have just did it from another website. Mm, okay. Let me see if it will let me. No. Okay. Got it. Mm, 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 mm. Bernice, yeah, we will talk about your personal situation privately. Um, One thing I just do want to throw out there, a lot of people think that CPAs um hold on one second. Okay. Um all right. So what happens is um so I put the standard deductions in the chat, right? So what happens is, in order to find your tax liability, so this is pretty much what your refund is. Tax liability minus uh federal withholding plus EIC plus ACTC plus any other credits eligible. Okay, so your tax return is based off of your tax liability, right? Your tax liability is based off of your total earned income minus your uh minus your standard deduction. So let's say somebody made $3,500. I mean 35,000, right? They made $35,000. They filed head of house and they had two children. And I know you're like, why am I learning this? Like, I'm not a tax preparer. You're learning this so you can understand how you get a refund, why you get a refund, and how to raise and lower your refund. So this way, people will not be freaking out all through tax season. Because if you look in the group, I allow quite a few of the posts go through of the same thing, but you have no idea um how many times people ask, what's going on? Am I going to owe for this tax season? They're not taking any federal taxes out. It at least gets asked at least 2-3 times a week. I don't put that many in the group. I don't allow that many to go because I mean I've answered it so many times. I even broke down the W-4 that I'm not going to keep answering it. So I'm like, sometimes it's really hard to understand dealing with text messages. So that's why I do these lives. If you're in my tax group, you'll know all throughout tax season I do these lives all, you know, and I'm open all year round. So usually all year round you'll get some lives from me. Okay, so back to, we have somebody that's head of house. They make, we're gonna say, let's do 25,000. They make 25,000. They're head of house. They have 2 children. Okay, they took care of their kids all year. It's their children. Blah blah. So if you notice up here, head of house is 20,800. So that is the standard deduction for head of household. So because of that, what is that? 200. I'm not doing any math off the top of my head. It's not happening, y'all. Yeah, 42. Okay, so 4,200 is their tax liability. You guys see how I got 4,200 for their tax liability? And we're not done yet. Okay. If you don't see, let me know and I'll do another example and explain it. Okay, so we have a 4,200 tax liability. Um that is, what the heck am I talking about? That's not correct. God. I'm like putting 5 things into one thing, guys. Give me a second. We have to do the tax bracket first. Geez. Okay. Give me a second. That is how the standard deduction goes, though. It takes away from your taxable income. Just so you know. But that is not what their tax liability will be. I'm going to, because that's going to be more difficult to explain, because now we have to go into tax brackets. And I believe I explained, you know, I wish I can find, I'm going to see if I can find my chat for this because I explained it so well to somebody. Okay. My ADHD like has my brain going, no. 42 is not what they would get back. Just scratch that for a second. That's what their taxable income would be, is 4,200. So let's see here. So for 2022, okay. All right. Your tax liability is based off of your tax bracket. So their tax bracket would be 4,200. That would be the first tax bracket. So 10%. Their tax liability would be $420 would be their tax liability. Not 4,200. It would be can't even speak. The 4,200 is their taxable income. That's how you get to your tax bracket. So let me show you how this goes. There is, and there is different rates for different filing statuses. And the crazy thing is, you're going to see that being single sucks. Like, it really does suck, because you are taxed the highest. So when you don't have any tax, let's see here. Oh, we want to go back. Mm-mm-mm. Oh, I didn't. Okay. So these are the tax brackets for 2023, which is 2022's tax season. So let's see here. I'll do single, and I'm just going to do single and head of house right now. Okay, so for 10%, and again, this is after that standard deduction that I posted up above. So if your income is 26,000, right? So okay, I'm confusing you guys because I'm all over the place. Going back to federal withheld, right? If you're head of household and you're only going to make $16,000 for that year, guess what your tax liability is? 0. So you do not need any federal taxes withheld from your checks because your tax liability is going to be 0. I one of 95K. Thank you, Lucy. So if you're if you are under your tax bracket, this is what I try to tell my clients. So if you're not getting any federal taxes withheld, and you know that you're going to make under your standard deduction amount, there's no reason for you to have federal taxes withheld unless you want a bigger refund with your money. So, because all you're going to do is get federal taxes withheld, and you're going to have the IRS hold your money for free. You don't get any interest or anything until tax season, instead of like putting it in a savings account. So if you're making under that amount, you do not need, and this, if you're married filing joint, it's both of your incomes, all incomes together. If you had a previous job, this is a lot of taxpayers' problems, because when they're filling out that new W-4 form, they are not putting down their previous job for that year. You need to put that down because they won't know if you made your standard deduction amount. So if you look on let's see, it is you need to do the worksheet. It's in step 2. You need to do that and make sure that you do it, because your payroll department will not know. And unfortunately, I'm really sad to say this, but a lot of payroll and some of these like assistants or people that are in the payroll department, they don't even know how to figure this out. So they're messing up. Like, they're like, never mind. I'm going to keep my opinions to myself. just make sure you talk to your tax professional if you think you're supposed to be getting taxes and you're not getting taxes out, or if you want to get taxes taken out. Okay, so here we go. The tax brackets, because somebody asked me about the tax brackets. Again, this is how you will find out your tax liability. So if I take the standard deduction and my 10% is around 1K, would that be my refund? Okay, so your standard deduction is 20. So you're saying that you make like $30,000, Ashley? I'm assuming you're doing head of household. And you're saying your 10% is 1,000, so that'd be 10,000. So like 30,000 you make, I'm assuming. I mean, it is honestly, that's more than the national average. You have no idea. So, okay. Married, filing joint, 20, 35 to 40. Perfect. Now, how many kids do you have, Ashley? And how old are they? Well, just put the ages of the kids. And that's easier for me to break down for you guys. So now you guys have like 3, 2 by end of the year. Okay, so a 3-year-old and a 2-year-old. So let's just go about where we'll be at before the credits. So let's just use $40,000. So 40,000, you guys get your standard deduction for this year will be 27,700. 27,700. So let's go down to married. What's up, Em? No. Hurry up! I'm on live. I'm not like. How did you? All right. Okay. So married filing joint. So with married filing joint, here we go. Your tax bracket. Let's see. That is. So 10%, and this is where it gets confusing with the tax brackets. 10%. Let's see here. The next one is 12%. Crazy, because you have to tax this amount for each one. So you're taxed at different amounts depending on your income. Oh wait. Oh shoot. I want to do that first. 22. Wait till I post the single ones. You guys are going to be like, what? I need to get married or I need to be head of house. But again, it all depends, because, you know, a lot of people that have. So here's a myth that we're going to pop real quick. A lot of people that have children, they think just because they have children, they automatically file head of household. This is an incorrect statement. And ever since the IRS included head of household as one of the red flags to be able to flag you and pull you for an audit, if head of household does not help your return in any way, you should not use it, and you should only use single. Correct, Ashley. Correct. Okay. So the 12,000, so let's say 12,300 would be your tax liability. I mean, your tax bracket. So that's your taxable income. So your tax liability, what the heck? Is 12,300, right? Now, you have 2 children. So CTC for each child is $2,000 with 1,400 of that being um being refundable. So, um for the 2 children, the 600, the 12,300 is your taxable income. The $1,230, that's your tax liability. So, technically, with both jobs at the end of the year, you should have $1,230 withheld from your from your federal withheld. That's what should be withheld. Unless you want it to be taken from your credits. Now honestly, you only need $30. $30 taken from federal withheld for the whole year. If this is the case, um with this uh what why can I not think? My mind is all over the place. With this example, you technically only needed $30 throughout the whole year for federal withholding. And let me explain why. Um, Automatically $600 from the $2,000 of CTC is um not refundable. So that's 600 each. You have 2 children, so it's $1,200. 600 a piece. So regardless of what, you cannot have, that will never be in your refund. So $600 for each automatically is non-refundable credit. So that's 1,200. That goes right to your tax liability. So now your tax liability is $30. If you had any federal withholding, now the federal withholding minuses that. So let's say your federal withholding altogether was $2,000. I can tell you like right now, let's see. Let me just pull up 2022. Um, Give me a second. I'm going to tell you for, I forgot how much do we use? 40,000, right? See, and this is why you need a tax professional, because you definitely don't need that much withheld. That's insane. Absolutely insane. Are you sure it's federal withholding, or is that all your taxes together? Because a lot of people think that where it just says taxes, that's their federal withholding, and it's not. Okay. Mm-mm-mm. Okay. So I believe we used 40,000, right? 40,000. And you have 2 kids and married filing joint. So you would be eligible for 3265 in EIC. So let's just use 4K to keep going into our example, right? So, 2 kids, uh, do, 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 do. Mm, mm, mm. The only thing it's hard for me to calculate is the ACTC. For some reason. I still but so you would have 3265 out of that federal withhold. Let's just minus $30. So that leaves us with 4,830. No, that doesn't. I lied. 4,900. What the frig? Why do I keep saying 4,000? $3,970. Jesus Christ. Okay. So $3,970 from federal withholding plus 3265 in EIC plus, let me see really quick. I got to do the 2022. No. Mm-mm. Okay. Yeah, you should get so, and then plus we use the 600, but you still have 1,400 each child for the ACTC, which is the additional child tax credit. And that, my dear, will equal a tax refund of $10,035. Oof. Okay, so the problem with the ACTC. So, Gabriella, that was married filing joint. That was a married filing joint example. She's not head of household, she's married filing joint. But if you give me some numbers, if you can give me some numbers, we can do another one really quick and I'll explain it to you. I can't believe there's literally only 12 people on my live. I must have to get closer to tax season. You remember how busy we are like during tax season? How many everybody has? Okay, yeah. And hubby's too, if he should have one too. So I need to find my charger. Ooh. I'm just gonna wait. We're just waiting for a sec. Does anybody have any questions while she goes grabs that? Okay, I'm still here, just listening and learning. Awesome, Miss Clark. Okay, I would love to see that back, Christina, once we speak after the live. I love it. Okay, absolutely. Actually, so I don't lose you. Let me just post. I'm gonna put that. For people that do watch this and do want to file with me, I'm going to pin this comment. This is my private tax group. Please just join it. And, closer we get to tax season, I do explain how you file with me. I'm 100% virtual, so I can file anybody in any state. Okay. So for me so far, okay. Once we get hubbies, we'll. Okay. Let me see here. I could have sworn I had a. Give me a second, because I thought I had a charger here, but I guess I don't. So give me a second. I have to get one. This is why you see the back so messy, because I'm literally trying to organize my whole life. So let's see if this will work. Moisture. Damn moisture in my phone. I swear, these new phones are just ridiculous. Gabrielle, I'm just waiting for hubbies. You never posted what hubbies was. You posted yours, but you didn't post hubbies. Oh, okay. Did he have anything withheld? Jeez, I hope so. I really hope so. I'm going to use my heat gun and try to see if I can heat. It's probably because when I was in the shower, I friggin'. So federal deduction. Oh, okay, perfect. All right. So, married. So we're going. Hold on one second. I'm gonna add that up real quick, and then I'm just gonna do a quick one after yours. Is somebody that has a low income, like somebody that makes under 20,000 and has like 3 kids, and didn't get any taxes withheld. I'm going to try to see if this works on my phone. All right. About to bring the big calculator out. Watch, I bet you. Yeah, because one of my kids was playing with it. Of course. Give me a second, guys. Why would this be wet? Why the hell would that be wet? Okay. And there is. I literally have a box full of batteries. Amazon. Go to Amazon. You get like 100 batteries. So I get all the batteries just in case I need batteries for something. Okay. So we are going with where was your comment? Okay. So 20,309 plus 5,800. 78,309. So the standard deduction again is 27. What is it? 27,700 this year for married filing joint. 27. So, oh, this is kind of cool because I can actually show you guys. I wasn't supposed to do that. Go back. All right. So I don't want item. Okay. So minus. No. Why is this doing this? Where were these amounts again? 5,800. 58,000 plus 23,9. 78 minus. No, why does it come? Let me get my other calculator because this is aggravating my life right now. 58 plus 2309. 78,000 minus 27,700. So your taxable income is 50,000. This is your taxable income, 50,609. And this is where we're at right now. So just FYI, Gabriella, you should be getting taxes withheld. I have a feeling your W-4 does not show that your husband has a job. I definitely have a feeling of that. Okay, Lucy, let's see where we're at. All right, so 50,609. All right, so your tax bracket. Let's go back to the tax bracket. So 10%. So I'm gonna have to write this down. Let's do, all right. So 20,000 of that 50,000, 20,000 550 equals 2055. 20,550. Shit. Yeah, I'm trying to do it on my calculator so it stays there. So 30, that leaves 30,000. 30,000 059. I need to make sure. Okay. And that's taxed at 12%. Which is, I'm trying to move this over. Okay. So total tax liability is okay. So if you see your total tax liability is 5,662. right? So that's how much both of you guys right now should have had taken out. You do have 3 kids. Um, so so you're actually pretty good because the 1800 from the CTC 5662 minus the 1800 brings it to 3862. So you actually are good on taxes right now. Perfect. And so pretty much your tax refund would be the uh 14. I don't think you're eligible for EIC, or if you are, it's literally the bare minimum. Um 5609 50. Yeah. Okay, so 1803, 1803. So actually you get 1803 for EIC plus the 1400 ACTC for each child. And this doesn't necessarily, because with your husband, I know he has 401k. So some of that income is actually not going to be taxable. So that will not be your tax liability. Um, so there is, so it's definitely going to be a little higher than what we're saying. You know what I mean? But right now it's looking at like $6,003. Okay, yeah. So that'll be the last year. Let me see if I can tell you. Give me a second. Um, because you do have to pay the taxes on that as well, which is good that you have some extra taxes being taken out. So that's pretty awesome, honestly. That'll help that. And that is, you are right. This is the last year, so you won't have to worry about that anymore. Did you guys pay any of that back? Because if it was a loan, we have to you need to find out exactly how much you guys paid back from that as well, because why is this not coming up? Oh, okay. um Gabriella, what is your last name? Can you message inbox me real quick? I just want to see what the tax liability on that is. The copies of your tax returns? Or, oh, you've been paying on the loan. I'm going to see who it's from, because you can just go to them, and they would have it like in your account. You can sign onto your account. If you don't have an account with them, you can make an account with them, and you can get that information. So, the little people that are still with us. Okay, perfect. Um, yeah. So when you file your taxes this year, when you give your paperwork to Lisa, just make sure that you add. They're all underage. Lucy, they're all under 17. Just make sure you add. Get the document of how much you paid. Why is that? Am I in the right text here? Yeah. That's what we. Mm-mm. Mm-mm. Oh, you're not Lisa. You're my client. You're not Lisa's client. I don't. All right. Let me see here. Yeah, I know. It's the qualified disaster plan. Um. Okay, so that adds 75.86. So with that, it just adds towards your taxable income. Gross excess tax payment. Would you feel comfortable turning tax deductions off? Um, Ashley, I definitely need to see your last pay stub. I definitely need to see your last pay stub before I can give you that answer, like yours and your husband's. Because I just have to make sure I know what you're telling me. If we go by what you're saying, absolutely you can shut it off. Um and not get any more federal taxes withheld. But I just want to make sure that that's what it is. So I would just need to see the last two pay stubs. Mm-mm-mm. All right. And then there was something else I wanted to look at, which was oh, oh yeah. Yes, absolutely. Just message me privately and we can do that. I'm about to wrap this up anyways. I see that there's not too many people watching. A lot of people will watch afterwards. Oh, that's kind of loud. I'm sorry. I'm trying to see if this would like stop this whole why is it saying that I have water in there? It's probably from when I was in the shower. I'm always bringing my phone in the shower. Okay, so just for new people, if you're watching this, um, and I'm actually going to go live tomorrow because I was all over the place tonight. And I do want to make things easier for people. Oh, before I go, let me do a really quick head of house that we'll say they have two children and they made 16,000. So their head of house, two children, 16,000. The kids are under 17 and they're, they're their kids. Let's see. Mm-mm-mm. Mm-mm-mm. Oh, they have the whole thing now. Okay. Tax table. I'm gonna put in my group. So So if you're watching this, I am going to put in my group the tax table, so you can figure out your tax liability. Um, it's the tax table. So this will be your taxable income. So you're going to look for your income after your standard deduction. And when you find that number, it'll show you what your tax liability is. Um, Hold on. I'm going to post that in the group, in my big group. I'm going to post it in my client group. I'll post it in both. We'll do both. Gabby, about the portal, the client portal, give me a few days on that, because I don't know if I'm going to stay with the people that we have that we're using right now. The whole purpose of the portal is to make your life and my life easier, and this thing has been an absolute nightmare. So I'm actually in the process of looking at a different provider, because it was hell. I swear to God, that thing was just a mess. Let's see. That's the where is here we go. 46 2. Okay. All right. Yes, perfectly. Okay, so if this is the first time you ever watched me, please give me a like, a share, a follow. I would totally appreciate it. The more and more I'm going to try to get up my YouTube channel, and my TikTok. I want to start doing my TikToks. Yeah, I'm excited about that. So, now that I got my pearly whites, all right. So I'm probably going to go live again tomorrow, way earlier, just so we can go over everything else. Before we go to do the, head of house, a mom that's head of house, $16,000 is her income. Because of the standard deduction, guess what her taxable income is? Ba-dum, 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 zero. So she didn't need absolutely nothing taking from federal withholding. 16,000. She has 2 kids, so she's eligible for 61, 64 in EIC. And let me see. Give me a second. I gotta figure out what's going on with my phone, man. I gotta find out this person. Okay. Give me 1 second. I'm trying to find for the AC. Where is... Let's use this one. Does anybody have any questions, by the way? What is going on here? Sure. You can ask me. You can ask me. Let me see this. Okay. All right. So. For federal, they won't impact them at all. So 6A. I had to get the thing for the... So with this one, so this is where, let's see, 14, 28. So this is where it gets confusing because, again, so for this, for the child tax credit, additional child tax credit, it's calculated by the income, and there's a percentage of that. So you don't get the total, like it should be $1,400 each child. It's not like that. So depending on your income, so for this person, they would only get $2,025. So their total refund, and this is somebody that made $16,000. They have 2 kids, and they didn't get any taxes taken out. So, oops. I think I need new batteries in my lap. So that would be their refunds. Somebody that made 16,000, no federal taxes withheld, and they have 2 kids under 17. So before I go, I just wanted to let you know. So as you see, their refund is $8,189. Now, because this person gets ACTC and EIC, they have a 50% chance of being pulled for an audit. Because they have to make sure that they really are eligible to claim these credits. Now, I'll have to say, one thing that has always been my pet peeve is when somebody does get audited and they send everything, or they don't send everything, or, it's just taking a long time, and they start complaining about needing their money now. If you notice, this 8189 is not their money. They didn't get any federal taxes withheld. These are credits. So technically, if you want to think about them, it's technically like federal welfare. So because they are lower poverty and they're under the poverty line for having 2 kids, which, mind you, is most of the US. I want you to know that, is under poverty. So it's really not your money. And this is the reason that they can audit you and they can take it away from you, because it's not your money. It is a credit. And it's just like if you got food stamps or state welfare or anything like that. So it's the government giving you this to keep you above income, and poverty. So I just wanted to throw that out there. If you are audited and you did happen to get any federal withholding, you actually would get a check for just that federal withholding while the audit is going through. So you actually do get your money, what is considered your money, while you're going through that audit. All right, guys. Well, I'm going to let you guys go. I appreciate everybody watching. I'm sorry I ran my mouth tonight again, like always, but tomorrow it'll be better. So make sure you come back. And if you do not want to become a client and you just want to join my group to get updated about all types of taxes and stimulus or anything to do financially, you can always join my big group, which is Tax Refund Craziness. I'm about to actually change it to 2022, 2023. And everybody, I hope you guys have a great night.